Markets end with cuts amidst the ongoing Israel and Iran conflict. Nifty outperforms in today's session, while mid and small cap ending with over 1% cut, except auto, all sectors trading with it.
Siemens Energy lists at a hefty premium to the implied price on demerger from Siemens Limited. The company becomes India's largest listed pure-play T&D equipment player with a market cap of near 1 lakh crore.
Westside and Zudio retail chains owner Trent sees business growing at a strong 25% compounded rate through store additions and new category expansions. Analysts remain upbeat on the stock.
You're watching us here on Markets Forward. This is a show where we tell you all the key data points that took place on the trading day, but more importantly, all that you need to get up for the next trading day as well. I'm Mangalam. With me, Vinny Motiwala. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. If you look at the front line indices, it may seem like a listless day today because the Nifty, for all the movement that we saw through the day, has only 18 points to show for a move on the downside. But the problem was beneath the surface. We had the mid-cap index, which was down about 950 points, and nearly 3,000 stocks on the Bombay Stock Exchange were lower as against 1,000 stocks which were higher. So portfolios felt the pain. The Nifty was supported by Reliance and ITC, whereas there was a big gash that we saw on the mid-cap end of things. We saw a big gash on the Nifty Bank, and the IT stocks as well saw a big dip as well. So all said and done, the Nifty was somehow managed on expiry day, but unfortunately, the broader markets...
Everything else didn't do that well. Nifty as well as Nifty Auto, let's just pull that up as well because that was the only sector that managed to close in the green. But apart from that, mid and small cap, like Mangalam was mentioning as well, nothing exciting happening on that front there, and underperformance clearly coming in the broader end of the market. But yes, that's how the market shape was looking like today. But here's what we have in store for you all in today's edition of Markets Forward. First up, we'll start with the top movers and shakers of the day with Vivek. And which are the important stocks to watch out for is what we'll watch out for next. Siemens Energy, we have, which has made a powerful debut on D Street. Other than that, Swiggy also was on our radar after IIFL's bullish commentary. Also, we'll put the spotlight on Trent and see what's happening on that front. And last but not the least, after all the important stocks to watch out for, we'll set you up for tomorrow's trading day as well with key market events to watch out for.
Right, with that, let's go to the first segment of the day. All the buzzing stocks. Let's talk about all the movers and shakers. A lot more on the downside than the upside, but Vivek has that list. Vivek.
Well, that's right. A lot more on the downside than on the upside. You actually saw a whole host of stocks, especially in the broader end of the market. The advanced decline ratio there, very, very weak. Very few gainers today. We'll get to them straight away. First on the list, of course, was Swiggy, and IIFL initiating coverage note. That aided the rally today, up over 2% in what was a very weak market. The other stock that did quite well was Biocon. Remember, large fundraiser in this particular week. After that positive commentary coming from HSBC as far as Biocon was concerned, they believe that the QIP funds that will be used to go ahead and ease leverage is something that is quite positive. And also keep an eye out for Tata Consumer. That particular stock ended as the top Nifty gainer. Very select FMCG stocks today managed to end in the green. On the other hand, the list of laggards very strong, quite a lot in fact. The entire PSU banking pack, all of them today under significant pressure. Names like Bank of India, Indian Bank, all of these stocks under significant pressure. The entire railway pack, we did see, Sanjeev Prasad of Kotak coming in and telling us that he couldn't understand the high valuations that these stocks trade at. Street clearly took note of that. Look at the entire railway pack, all of them down quite significantly. Hindustan Zinc, remember a couple of days ago, you did see a large block deal over there. That particular stock continues to see selling pressure. Tech Mahindra, a couple of brokerages have gone ahead and downgraded the stock today. It was the turn of Morgan Stanley. That particular stock ended low by almost 2%. And lastly, pharma stocks. It's not been a good week for the entire pharma pack. Today, they weakened further. It was the mid-cap generic companies that fell significantly. Names like Laurus, Granules, JB Chem and Pharm, all of these stocks among the top laggards in today's trading session.
Okay, Vivek, thank you so much for the roundup in terms of which were the top movers and shakers in today's trading session. Let's bring on board our experts for today. We have Ambareesh Baliga, who is joining in with us. Ambareesh, couple of sectors that Vivek has highlighted. One is railways. PSU banks is also something that is coming in as well. Your thoughts coming in on banking side as well as railways? Do you think railways are now too expensive and that is the reason that, we are seeing this fall and it's something that will continue?
Exactly, because if you're talking of the next 3 to 5 years, whether it's railways or defense, I mean, one should clearly be bullish, no doubt, because of the sort of order flows which are coming and the focus which is there of the government on this space. But then if you're talking in the short to medium term, with the sort of a rally which we have seen, I think most of the stocks are a bit overvalued. So I think looking at the environment, we should wait for a while for a correction to buy into railways as well as defense.
All right, Ambareesh. Yeah, you were making a point.
I mean, if you're talking of the banks, the BFSI space, yes, I think this is one space where one should be bullish on because, I mean, with this rate cut, clearly, I mean, I'm expecting the credit growth to happen and because of which you'll have the PSU banks clearly gaining. So that's one space I would be positive on.
All right, you spoke about the railways and their valuations. Wonder what your thoughts on this one would be. Siemens Energy, that's the one that listed at a premium to the implied price on demerger from Siemens Limited. With this listing, now it's become India's largest listed pure play T&D equipment player with a market cap of nearly 1 lakh crore rupees. Vamakshi joins in with the listing details. More importantly, the valuations and how it fares against the peers as well. Vamakshi.
Well, Mangalam, Siemens Energy, pursuant to its demerger, listed at 2,840 per share, which is much higher as compared to its implied price of 2,478, which was determined on 7th of April. With this, like you rightly pointed out, it becomes the largest listed pure play power T&D equipment player. And in fact, brokerages are penciling in good growth prospects for this particular counter. Jefferies, for example, expects a revenue CAGR over SY 25 to 27 of almost 36%. The PAT CAGR could be at 49% and the EBITDA margin is expected at 19.5%. On the other hand, Motilal Oswal expects 25% revenue CAGR, 31% PAT CAGR with an EBITDA margin of 21.4%. Now, as far as valuations are concerned, if we consider the EPS for SY27 and the listing, the price at which the stock had listed this very morning, the price to earnings ratio stands at 51 times, which is lower as compared to its peers Hitachi Energy as well as GE Vernova T&D. Now, based on this, brokerages have also given a target price for Jefferies. It's much higher at 3,700 rupees per share. For Motilal Oswal, it's at 3,000 rupees a share. Now, apart from this, what one needs to keep in mind is that Siemens Energy will be removed from the MSCI Global Standard Index with effect from June 20th, which happens to be tomorrow, and there could be passive outflows ranging anywhere between 170 to 120 million dollars as per Nuvama Alternative and Quant Research. But it is also important to monitor how the FTSE responds to this, after the company has been listed now. So, important development out there for Siemens Energy.
Okay, important development out there for Siemens Energy. We'll keep an eye out on this one tomorrow as well. Today is obviously something it's made a debut after its demerger with Siemens. We also have Jay, who is joining in with us as well, Jay Thakkar. Jay, just your thoughts. I know Siemens Energy is not something that you will have on the charts as that front, but Hitachi Energy, GE Vernova, its peers. Anything exciting happening on that sort on the technical front that you would look at maybe?
Hi, good afternoon to you, Vinny, and Mangalam. Well, overall, this space has been under pressure, I would say, rather, and we have been seeing, the downtrend overall. I mean, we had some bounce back, definitely, in its peers as well, but then overall trend has been negative. The momentum has been negative for these stocks which are there in F&O or are non-F&O stocks. So on this space, as of now, in the short term, we need the trend is down. In fact, I think the trend which is absolutely positive somewhere right now, at least since past couple of months or days, has been clearly IT pack only, and that too specifically building up IT games. As rightly pointed out by Ambareesh as well. I mean that the BFSI segment had seen some run up recently on account of RBI monetary policy, but then that too seems to have given up right now. In the short term, medium to long term perspective, definitely less positive. So in the short to medium term, I think this space, as far as energy segment is concerned, has been under pressure. Apart from that, I think the IT, a bit of auto, these are the few spaces wherein we are seeing some good uptrend. Maybe iSure, TVS, something like that. Energy has been in a downtrend very.
Right. Ambareesh, what is your thought on the valuations for this T&D space itself? Because none of them are cheap. Yes, you can speak about relative valuations, etc.
Yeah.
But they have a long runway for growth from here on. But at 55, 60, some even 70 times, how do you fancy your chances here?
A tad bit expensive, but then I mean, looking at the sort of a growth which is happening in this space, and at least a foreseeable future of the next 6 to 8 years, I think stocks like these should be bought on a correction. And now, since we are expecting some passive outflows by funds, I think that could be a good opportunity to buy into Siemens Energy. Maybe, I mean, levels of closer to about 2,500, 2,600. I think one should be looking to buy. And again, when you're looking at most of the targets which have come, I think targets are between 3,000 to 3,200. So I think one should wait for those levels of 25, 2,600 to buy.
All right, that is on the T&D space, and Siemens Energy 25, 2,600 is a better level to buy. Let's talk about another stock that was doing well today. That was Swiggy. Shares ended about 2.5% higher after a spate of underperformance, and this one can be attributed, the up move today can be attributed to IIFL's note, which has basically initiated coverage on the stock, a target price of 535 rupees a piece, a buy rating. What they've done is they've positioned Swiggy and looked at where Eternal was vis-a-vis where Swiggy is right now, and they're currently 5 to 7 quarters behind Eternal when it comes to food delivery, and 3 to 8 quarters behind Blinkit when it comes to quick commerce. At some point, they believe if they grow 28% in revenue over the next 3 years on a compounded basis, they are likely to hit EBITDA profitability by FY27 and net profit positive by FY28. So put all of these things together, they're valuing Swiggy's food delivery business at a discount to Zomato at $8.5 billion. Zomato trades at around $14.5 billion. If you take this off Swiggy's current market cap, which implies that the quick commerce business, that is Swiggy's Instamart business, is trading at an 88% discount to Blinkit. And that, they believe, is a cause for asymmetric returns out there. There could be valuation narrowing happening for Swiggy, and that's basis the execution that they expect on Instamart. Ambareesh, the stock's doing okay-ish, still below the IPO price and still at a very wide discount to Zomato. Do you think that this discount is expected and sustainable, or at some point the twain shall meet?
I think at some point there would be that catching up, because finally it's just two of them in that space. I mean, the recent worries were about like Rapido getting into that space. But then if you look at that, Rapido could in fact face serious challenges. I think the Indian food delivery space has proven quite hostile to the newcomers. I mean, you've seen giants like Amazon, Ola, Uber. I mean, all of them have failed to scale meaningfully. And finally, I mean, they've exited or pivoted. So even if you look at the government-backed ONDC, I mean, even that faced headwinds due to operational complexities. So finally, it will leave the market only for Eternal, which is Zomato and Swiggy. So in the longer term, yes, I think one should be positive. And since we're talking of that catch-up happening with Zomato, I mean, at these levels, one could look at buying. But again, it's for long term, not for short term.
Long term, not for short term. That's the word coming in here. Jay, your bet coming in on Eternal or Swiggy. Swiggy, not much in terms of charts, but if you've read up on anything in terms of Swiggy, would you find it as a better bet right now to enter on? Jay?
Really, plainly based on, I mean, see, based on the overall data and the structure, I think that Eternal is relatively better. I would say, fundamentally, as it has been explained by Mangalam, that, some brokerage houses have a high report right now on Swiggy, but then Eternal has already performed well. And recently, we have seen the stock providing a good breakout above the levels of 240 as well. I mean, the shorts which were there in the system got covered, hence, the stock went up from 200 to 250 right now, approximately. So we've seen a good short covering happening. We've seen a momentum shift from sell to buy, as well as breakout about the 250, 240 levels. So I think now till 240, 235 levels, or the range that is held, the stock either consolidates or probably, move higher to 300 plus levels. So I think Eternal is relatively looking better as of now, as that to Swiggy.
All right, Eternal looking better than Swiggy. Let's talk about another stock as well. It's Trent, the company that owns brands like Westside and Zudio. They held an analyst meet yesterday, the annual investor day. What was interesting about this is that they're talking about the growth headroom that we're seeing in the value fashion and all the other categories that they operate in retail as well. And given the sort of runway that there is, they believe that 25% compounding on the revenue is fairly sustainable, and that will happen via two things. One, they will expand into newer categories. Secondly, they will increase their existing stores as well. What is it that works for them? One, remember, they have a very strong backward integration in supply chain tech, which helps them full control of the back end. Secondly, in Star, which is their grocery format, nearly 3/4 of their revenue comes in from their own brand. I mean, they're also seeding newer brands. They have Utsa, Samo, as well as Zudio Beauty, that all of them are, willing to grow, and these companies are looking at them as the next platforms for growth. And in terms of categories as well, they've identified 3 of them which have shown exponential growth. There's innerwear, there's footwear, there's beauty, all of them growing anywhere between 70 to 150% over the last few years when it comes to volumes. Brokerages have written on this. They believe that, there is growth runway, but they are circumspect on a couple of things as well. Motilal Oswal, a buyer on the stock, target of 6,900. They believe that it will be important to track the same store sales growth, as recovery will be back-ended because of the store additions that we saw in Zudio in the last part of FY25. So same store sales growth in both fashion and grocery will be crucial to track. We have a note coming in from Macquarie as well. Now, Macquarie has the highest target price on the street, but they believe that, in the grocery format, quick commerce competition and the lack of success for private label brands keeps them a little skittish, but they are positive on the fashion format. And finally, we have Jefferies as well. Jefferies believes that this is a company that grows organically, and they believe in a model that can be replicable over a period of time and repeatable. So that's something that they will be tracking as well. So I guess, Jay, from a chart check, the stock had seen a big correction, nearly halved from the top. And then from lower levels, it has seen about a 20-25% jump. Is it for real? Is it, trying to make an attempt towards the previous all-time high?
That's looked difficult, Mangalam, see, overall fall which we had seen in Trent mainly was earlier due to the long unwinding, and then thereafter we saw some short getting built up as well. The recent bounce back which we saw in the stock from, approximately 4,500 until, say, 5,900, 1550 was mainly on account of short covering, Mangalam, I would say. But then the overall rise doesn't seem to be that impulsive. In fact, the momentum also seems to have started weakening again. So I think going forward on the upside, 6,000 levels approximately will act as a very crucial resistance, and the rise so far doesn't look that impulsive, as in, the start of a fresh up move. So I think some more pain or consolidation in the stock is still left. The overall shorts are not yet covered fully. So the overall trend seems to be negative only. I think around the levels of, say, 5,400 to 5,300 is something one can review if at all someone wants to go long from the short-term perspective. From the medium-term perspective, I think that the trend is still negative.
Okay, trend is a bit negative even from the medium-term perspective on the technicals. But Ambareesh as well as Jay, thank you so much for joining in with us on the show as always and helping our viewers understand individual stocks as well as markets. But on that note, viewers, we'll slip into a very short break, and after the break, we'll get you the top commentary coming in from managements on where dollar is heading with the ongoing West Asia conflict, along with key market events to watch out for in tomorrow's trading session.
Welcome back. You're watching us here on Markets Forward, a show where we prep you up for the next day's trade, but we also tell you what took place today. And today was some key corporate commentary coming in from the management of Shriram Finance. They guide for second half of FY26 to be much better for growth. They add that credit demand should pick up as rural demand is likely to be supported by good monsoons. Commenting on the near 2,340 crore write-off in the March quarter of FY25, they said that this was a one-off event which was on the back of an accounting change. They expect recovery over a period of some time, and it will reflect every quarter. The NBFC optimistic about passing the RBI rate cut to customers in the coming months.
If Israel and Iran conflict is short-lived, dollar will not see much of an impact. That is the word coming in from Jahangir Aziz of JP Morgan. He also believes the risk of recession is still elevated. Listen in.
What I think the market is looking for is what happens next, right? In the sense that, does the conflict widen? Does the conflict actually disrupt oil supplies? And I think if that happens, I think the oil market moves. And I think at that point, I think, dollar once again becomes a safe haven. Look, I think temporarily the money moves into dollars but mostly into gold. I think that's where the move is going to be based on what has happened over the last 3 months. But it's a 2-week, 3-week phenomenon. I do not really think there's going to be much of a chasing of dollar as a safe haven, simply because none of the basic fundamental variables get that badly affected if it's just a 2 or 3 week event. we do no longer have a recession in the baseline for 2025. However, we still think that the risks of recession are still elevated. And if you do get another disruptive tariff uncertainty related reaction in the market and in the economy, then those recession risks are back. Even now, tariffs to me are probably a bigger risk, and how tariffs evolve post the court decision to us is still a bigger risk than a flaring up of geopolitics. There's obviously a risk in the near term, but I think if you think about it in the next 6 to 9 months term, I think that's still a bigger risk. U.S. fiscal policy is also a bigger risk.
And before we wrap up this edition of Markets Forward on CNBC-TV18, let's bring you the key market events to watch out for in tomorrow's trading session. Vamakshi is joining in with us. Vamakshi.
Well, Vinny, we'll be keeping an eye out on the RBI MPC meeting minutes. The Philadelphia Fed Manufacturing Index will also be declared tomorrow, so we'll be watching out for that number as well. ECB's economic bulletin will be another factor that we'll be watching out for. As far as stock-specific action is concerned, keep an eye out on a whole host of counters that will go ex-dividend. The list will come up for you on the screen. We'll be keeping an eye out on stocks like Bajaj Auto, Voltas, Bank of India, PNB, HDFC Life, Tata Power, Supreme Industries, as well as Torrent Pharma. Ugro Capital will also be in focus. They will be considering fundraising plans via preferential issue. And tomorrow there's a nuclear kid on the block. Oswal Pumps is expected to list.
Right. Vamakshi, thank you so much for that. So prepped up for trade tomorrow. With that, we wrap up on this edition of Markets Forward. Don't go anywhere, though. Keep watching CNBC TV18. We'll be back with more news and updates on the other side.